Earlier, we did say in the headline, you have BSP Governor Felipe Medalla saying that, inflation, we might see inflation peaking in December. In fact, it's not ruling out the possibility that it might actually hit that ceiling of 8.5%. How likely is that? Are you projecting the same?
Well, as far as inflation is concerned for December 2022, I am projecting it to reach at least 8%. Maybe the 8.5% projected by BSP is feasible, given that oil prices continue to swivel and supply constraints have been persistent even during the holidays.
Now, given that, how do you see inflation panning out for the full year at least?
Well, given that inflation for December would pan out at around 8%, full year inflation could be posted at 6 to 6.5% annual year on year.
Do you see at least price pressures going back to within target by next year? When do you see that happening? And when do you see a tempering happening as well?
Well, historically speaking, inflation rate has been always at its low at the beginning of the year, say January and February, because it is the months that we experience a relatively lower demand after the holidays. So I expect that inflation would start to temper by January as demand starts to slow down again as we end the holiday season.
And when do you see us going back to that 2 to 4% target band?
The 2 to 4% target band can only be achievable once we have addressed our supply constraints. Until supply constraints, particularly in food and in agriculture, is persistent, achieving a 2 to 3% inflation rate might still be a long way.
Are we doing enough on that end? Like you mentioned, food supply constraints here. The most that the government has done, of course, you have importation orders, particularly for sugar for next year. At the same time, you have the extension of the easing of import tariffs here on some basic agricultural goods. Is that enough to actually curb and combat inflation?
Well, what the government is doing as far as relaxing tariffs, importing agricultural products, it actually helps in tempering inflation that is highly driven by food inflation or food prices. However, that is only helpful in the short term, wherein we need to be more aggressive in implementing long-term solutions such as investing in agricultural development, reducing the supply constraints through higher production, the reduction in constraints to transportation in the distribution of food, and of course, an investment in technology that will allow our agriculture to be more commercialized than largely subsistence. That would definitely be able to solve inflation problems in the future that is driven by food prices.
Okay, but how exactly do we calibrate this whole importation policy? I mean, you did mention that it helped at least in tempering prices. But, like for example, the easing of import tariffs on some basic goods, it's been in place for months now, especially after we did see pork prices increasing due to the African swine flu. But still, prices remain high for some commodities despite, of course, this aggressive importation of some of these goods. Why is that?
Prices remain still be relatively high despite what the government is doing. It's because prices here in the Philippines do not instantaneously adjust. As we can see, prices are slowly declining, slowly slowing down. The increase in prices slowing down. It's because the policies that the Bangko Sentral have implemented before, the importation is just starting to take effect. We do not expect these policies to instantaneously affect our inflation, the supply of goods. It's because it takes time. And that time, most likely, the impacts of what we have done in the previous months would take effect by January 2023.
Okay, let's see if that's going to come to fruition by next month. What will likely drive inflation higher next year? Earlier, we reported, of course, mixed price movements here on oil. It's been swinging up and down over the past few weeks here. But globally, we see prices tempering over the past few months as well. So where are the risks coming from? Is it still going to be more offshore, or we see a more prominent domestic risk here as well?
Well, for next year, it would definitely be a combination of local and international risk, considering that oil prices are still moving in the international market. There are still political issues that are persistent in other countries. And for our domestic sector, the supply problem, no, the value chain problems that we are experiencing until now would still persist because it would require necessary intervention from both the public and private sector to ease it.
Of course, the BSP has been doing some heavy lifting by the hiking of rates, but they've been saying non-monetary interventions have to be in place earlier. You did mention a number of items here that at least we can do when it comes to food supply here. But what other measures should be in place here to combat inflation?
Well, for next year, for 2023, maybe the BSP can start tempering the rise in rates because it will now be we are now experiencing a decrease in demand. So hiking rates might not be that crucial for us to temper inflation because by next year, the movement in inflation will now be affected by the demand. By a lower demand.
Given that, how do you see the central bank moving for next year? Up to when do you see them hiking rates, and when do you see them pausing, or is there even a likelihood of them unwinding?
Given the recent trends and what's going on with the consumer side of things, I think the central bank would slowly temper hiking its rates, given that demand is already slowing down, and they would definitely lower it down as soon as indicators would show that the economy is now starting to go back to healthy levels, let's say, of inflation, of exchange rate, and of course, we are now seeing as early as December that the currency, the foreign exchange rate, is starting to go back to the lower 50s level.
Now, given that, of course, that all factors into our growth level here. Third quarter surprised, especially for most analysts here. Do we see another shocker happening in the fourth quarter?
In the fourth quarter GDP growth, I'm seeing around a 7.8 to 8% growth in GDP, given that it's the holiday season and historically, our GDP is registering the highest growth in the fourth quarter. And on that note, the year-on-year growth for our GDP this 2022, I am pegging it at around 6.5 to 7% given the previous quarterly GDP growth rates.
But also, you have a number of projections now pointing to slower growth for next year. Even the BSP saying that that's despite, of course, forecasts that inflation will also start to ease by next year. Like you mentioned earlier, the possibility of it as well going back to within target. So why the divergence here that we are expecting slower growth next year, despite the fact that projections are pointing as well to an easing in terms of inflation?
Well, slower growth would be driven by the fact that people have already lower purchasing power by first quarter of 2023. Therefore, demand would temper, inflation would temper, and because the Philippines is a highly consumer-driven economy, the reduction in consumption due to a reduced demand by first quarter of 2023 would contribute to a slower growth in our economy by the first quarter.
Okay, now of course some analysts, even the BSP, saying the likelihood of a recession happening is quite small here, but it's really just a matter of how much growth is going to decline for next year. How are you seeing things panning out for 2023?
Well, personally, for 2023, as we close in on the pandemic, as we end the pandemic, as the economy slowly opens and return to pre-pandemic levels, the possibility of a recession, I would agree that it would be slim, but growth would be slower given the headwinds that we are currently experiencing. I don't expect a recession, but maybe it's really more of a slower growth than expected.
But can we confidently say that we are out of the woods now, that we have returned to pre-pandemic levels?
Well, personally, not yet, because number one, we have not yet declared that the pandemic is over. And number two, as soon as we declare pandemic is over, then that's the only time wherein businesses, foreign investments would definitely come in at a more aggressive level.